Okay, at the end of this session, I don't promise that you're all going to go back as financial experts, but the bare minimum that we're going to do in the short time that we have is to ensure that you at least know what you need to know, what you don't know, and where can you get help in case you don't know it. We have now another reason for doing it. Okay, as she said, women, if you look at India, it's a strange situation. You have so many women heading banking. I think we have the most powerful, top layer of women in banking. And you would think that that would go percolate down the line. It doesn't happen. While you have so many women bankers heading banks, you're struggling to have women directors. And the only women who become directors on boards of companies are sisters-in-law, mothers, daughters, and what have you. Nobody else is considered fit. So we have a long way to go. And like everything else about India, everything is sort of half correct. It's one extreme or the other extreme. So women's position and women's knowledge about finance is exactly like this. If you look at how many women we have in finance, you would think, why do Indian women need financial literacy sessions? And on the other hand, you look at women who are, and these are real stories, okay? Everything that I'm saying here is a real, true life example, and you're going to see a lot of them. We've been socialized into thinking, okay, husbands, fathers are going to make decisions. Women, however bright, doesn't matter if it's a 7-figure salary check, like to give it to the husband and saying, you do it. Do they really know enough? You should come to some of our workshops and you will know that you are being very dangerous with your money if you're thinking the guys are going to invest it for you correctly. Okay? Because their decisions are affecting your life. Why do women do this? Not because they're lazy, and actually not even because they're not interested in finance. Because not interested in finance, believe me, applies to everybody. And I'll tell you why. Why is it that women have less time? Because more often than not, family comes first. Right? So you do your 10 to 6 job, and then your next priority is not to come to Moneylife Foundation and attend a seminar, but to go home because there are so many responsibilities. So it's not that women don't want to take interest in finance. There is really no time. All of us have only 24 hours. And when it comes to understanding money, believe me, we know better than the guys. All women manage their home budgets. I'm sure if we take a poll here about where is the best sale in town today, it's a season of sale, I'm sure everybody knows more than anyone else, right? And that's being interested in finance. I mean, how the hell do you know that you want to spend less and get the best deal? That is exactly what investment is all about, and we are very, very good at it. So don't let anyone kid you into believing that we are not. What we are not doing is applying our minds correctly, and I'm giving you a few tips on what you should do right. Now, why do you need to be interested? Because women outlive their partners by 5 to 7 years, a global average. Okay, it may be more but not less, which means at some time in your life, you're going to have to take charge of your life, or you're going to be at the mercy of relatives, children. So it's better that you be prepared. Second, people are living longer. And in any case, women live longer, which means even if you're working, you retire at the age of 60, be prepared for an average of 20, average is not true, but say 20 years or so of living on your savings. So you have to keep your savings safe because you're going to be living off them. And third, all the emotional issues which make women more vulnerable, because women are supposed to give, okay, and not think about themselves. They're supposed to be self-sacrificing, so they end up with much less. And I'm not saying that's a bad thing, but at least do it with your eyes open to what the consequences could be to yourself. Now, this is interesting, there is a book, and I keep telling them it's so badly titled. It's called Breaking Up. Okay, and I'm going to hand out a few copies. And I keep saying if the book wasn't called Breaking Up, a lot more people would buy it. Because imagine having a book called Breaking Up around your house or in office. Everybody is going to say, what? What's going on, right? It's a badly titled book, but it's a must read because it covers a lot of things that I'm going to say over here today. 90% of issues, if things go wrong, marriages are made in heaven. We all want and expect the best, but if things go wrong, 90% of your issues are going to be financial. And mistakes that you make today are going to make you pay such a tremendous price. I'm going to cover these things, okay? One is, first, focus. Don't lose money. Second, you need insurance. Certain contingencies, nothing helps but insurance, so you need to have the right insurance. Third, financial hygiene is what I call it, because it's just simply dotting the I's and crossing the T's, which all of us forget about. Just be careful about that. It takes care of about 80% of your financial problems. Avoid emotional traps. I told you we women are more vulnerable to that. Avoid credit. I'm going to explain all of these. And then Devashish's session is on safe financial products. Even there, we're keeping it to a small session. Keep coming back for more. It's free and it's happening all the time. Right? So, like I told you, don't let anyone believe that the guys are better at finance, because it all boils down to a simple matter of understanding risk. Okay? Now, human evolution has happened in such a manner that in all these years we've grown from monkeys to humans, but our brains have still not been hardwired to understand finance. There are exceptions, there are geniuses, we are not talking about them. Ordinary people, men or women, are not hardwired to understand financial products. And this is the reason why you end up having a global financial crisis. And after things have happened, and when everybody is doing the research and investigation, they wonder, how is it that smart, intelligent, educated people fall for the kind of gimmicks that led to a big global scam? You look at housing mortgages in the US and whatever, it is so unbelievable when you look at it in retrospect, but everybody fell for it. And more than 50% of those decisions were made by men. Why does this happen? Because we are not hardwired to understand finance. This goes across the board for everyone, not limited to women. Although, like they say, women are bad drivers, everyone will pretend women don't understand finance. So just as we don't believe women are bad drivers, don't believe that women don't understand finance. What else happens? Our minds work against us all the time, because we tend to look at financial products exactly like we look at consumer products, which means what? That if you buy a big brand, you buy that Lamborghini or you buy a Rolls Royce, you expect better because you're paying more. Only in the financial world, a big brand or paying more doesn't necessarily translate to maybe better service. Okay, you'll get a cappuccino when you go to a certain bank. You may get a birthday card, but it doesn't mean better financial decisions. A brand name has never translated in the financial world to better returns on your investment. And this is a mistake we make. You go to buy a mixer or a TV, you say if you're buying a certain brand and you're paying more, you're buying an Apple instead of buying a Samsung, you expect better. Don't do that in the financial world. The second thing is you can't test it. Now you buy a television, plug it in, buy a mixer, plug it in, it works. You buy a financial product, the end of 1 year, you will know whether you've been an utter fool or you made the right decision. So you don't know until the end of 1 year. You can't test drive it, right? You want that car also, you can test drive it, but you can't test drive a mutual fund. It's only 1 year later, when you know the returns, you'll know whether your fund manager is good or bad. So you have to look at financial products very differently from what you would do when you go to an electronic store or a garment mall. So key, safety first, avoid investment traps, don't lose money. Because we say we all work very hard to save. Even if nothing happens, your money remains in your bank. Of course, Devashish will tell you it's the most foolish thing, because inflation is eating into your money. But you hear that separately. But whatever it is, don't allow anything else to erode that other than inflation. Because inflation is constantly eating your money in any case. So you have to do better than that. Imagine if you start losing money, big chunk of your principal itself is gone, and more of that in the second session about why it affects you. So where do we put our money? In banks, right? The first thing you do is your check goes into your bank. And lesson 1, get that bank right. Okay? Because around the world, when it comes to bank, big is beautiful only because big is not allowed to collapse. In India, we're lucky. More than 45% of our banking system is still nationalized banks. So when it is a Sarkari bank, doesn't matter if net worth is eroded, your money is safe. So stick to nationalized banks. Private banks follow the policy of too big to fail. When you're looking at the top 4 or 5 big banks, don't worry about SMSs that say they're running out of money. They don't run out of money. The RBI will give them money if required. They will not be allowed to fail. So don't panic when it's a big bank. And remember, in 2000, even a relatively new bank like Global Trust Bank, which wasn't that big, wasn't allowed to fail. They did a shotgun wedding and they made a public sector bank take it over. Your money was safe. So as long as it's big, it's fine. When it comes to smaller banks, especially cooperative banks, please be careful. Barring 2-3 exceptions, and I think all of you know who they are, these come under dual regulation, so they're regulated by the government, the cooperatives department, that too, and the RBI, which means neither of them regulate them properly. There's enormous political pressure, and if you follow RBI press releases, every single month there is at least one cooperative bank failing. Okay, and while you have some deposit insurance, 1 lakh per customer, not per account, it takes sometimes 2 to 3 years until the bank actually goes into liquidation and it's ready to fold up. You don't get your money. So I would say not more than 1 lakh. Even that 1 lakh is not going to come easily. If your cooperative bank is next door or in the same building, it's a convenience. You may sometimes want money there. But my hard-earned money, I would not put in a cooperative bank. It's not the kind of risk I would take. I really work very hard for it. Now we're coming to relationship managers. Okay, this is something that all the big ads are all about, which is that all of us in the last 20 years have been really thrilled that each of us have a relationship manager who calls us up, and all those gooey commercials about this dumb woman who'll make a call, the banker comes home. Wonderful. Take the positives, be careful about the negative. Okay? You must remember the relationship manager is not there to charm you. The relationship manager, as far as the bank is concerned, has a very, very specific role and an enormous target, which is to get you to invest money in anything but a fixed deposit. They don't want your fixed deposits. So the world has moved on. There was a time when banks used to persuade you to put your money in FDs. Now they want you to buy insurance. They want you to buy gold. They want you to buy anything else because it gets a higher commission for the bank. So remember, the nomenclature may be relationship manager, but the relationship manager is a sales agent with a stiff target for the bank. And women are great soft targets. Happens to me all the time. I go to my bank, I go to renew my FD, 3 of them suddenly are crowding around and they look at me, make me feel as though I'm this dumb idiot. Because, we women have such an advantage. All of us are considered dumb until proven otherwise. So they come and, they say, putting your money in an FD? Why not buy a ULIP? I mean, if it's happened to me every single time, I'm sure it's happened to all of you. So they want you to put your money in a unit-linked insurance plan. They will make any promises. They will say you'll get a 24% return. They will say 30%, whatever it takes. They do not hesitate to make false commitments about pricing and returns or about dispersal, about anything. Nothing is in writing. Okay? So please remember, when you call them home and give them a cup of tea, they're not on your side. In fact, they are trained to look at you as a blank face so that they don't get emotionally attached to you, and they're only focused on emptying your wallet. So you have to be careful. Get your relationship manager to do the work you want. You want investments done? Get that done. But don't fall for their investment advice. And what can happen? I mean, serious stuff, okay? This woman is Sucheta Krishnamurthy. Everybody knows her? Okay? You want to know how she was looted? She got 4 crores as a settlement when she got divorced. 3.6 crore went into this bank account in HSBC. They went to her when she was in this emotionally distraught state. 2 guys, nice suits, nice smiles, ties, and said, we will handle your money for you. Ma'am, it's lying in a savings bank account. And they told her, buy ULIPs. You'll get a 24% return. They told her to take a bank loan that she didn't need to buy a house because they said that the return on the insurance will be more than enough to pay the EMIs. So she had to take, and they said the loan will help her to save taxes. The ULIPs did not pay that kind of return. 2 years she's been fighting, okay? This is something, in fact, when I took this case up with the RBI governor, I said it's an extreme word we use, but it amounts to nothing more than financial gang rape because they are getting at your savings in every possible way, whether it's the loan, whether it's a mutual fund. They churned her mutual funds to create a loss of 29 lakhs. because every time you change a mutual fund, there's an entry load, there's an exit load, and there's a commission. So 29 lakhs was just the loss because of the commissions that they earned. So 2 years we fought and fought and fought her battle, and we managed to get her 1.37 crore back, I think out of her losses of 1.6 or something. But at the end of the day, it's a big victory, okay, for Moneylife, but it's not good enough. I mean, just think about it. 4 years later, no interest, nothing for the harassment, no lawyer's fees recovered, and she has not even got her full amount back. But it is far more than what even the regulators thought she will get. SEBI didn't think she'll get more than 29 lakhs. RBI didn't think she'll get more than 12 lakhs. And I think we kept pushing it in the public domain, and the only reason HSBC paid is loss of reputation. They wanted her to finally shut up, okay? And they probably wanted Moneylife to shut up, and so they paid her that kind of money. It's a big victory, but it's not a victory at all, because she hasn't got anything back. It's not a fight, right? So where do you invest? First, make sure that any of the investments that you make have a regulator. And this is a tricky one in some ways, because a lot of times when you get conned, you're operating under the assumption that there's a regulator. For instance, these days, a lot of you get mailers with real estate companies promising very high returns. A lot of people think it's a listed real estate company, so SEBI is a regulator. SEBI is not. Real estate has no regulator, and these deposits are not regulated by SEBI. So these kind of things are not. So if it's IRDA, there is a regulator, but if somebody calls you up and completely takes you for a ride pretending that either they are from the regulator or they represent an insurance company and they're offering you a free loan, you know, which, or an interest-free loan which is 10 times the premium, large number of cases come to us like this on our helplines, then that is not regulated, but it's something that you can fight. So at least if there's a regulator, it doesn't mean that you're not going to be cheated, but you have a locus standi and a specific agency to which you can go and you can fight. So pensions is PFRDA, IRDA is Insurance Regulatory Development Authority, SEBI is the Securities and Exchange Board of India, and RBI is the Reserve Bank of India. What you should completely avoid is all these plantation schemes, art funds, and like I said, real estate. These are the mailers that you keep getting regularly, promising fantastic returns, and we keep saying just stay away from all of them. Okay? If I keep saying your first goal should be don't lose money. If that is your goal, then don't even think about it. There's no question of being tempted. Bank deposits versus fixed deposits. I told you bank deposits are safe because in most cases, as long as it's a big bank or it's a government bank, because it doesn't matter how badly they are run, doesn't matter that the chairman got arrested for taking a bribe, your money is safe, right? But when it comes to fixed deposits, it doesn't matter how big the brand name, that particular company can be making a loss. As you know, Yash Birla companies, people are running from pillar to post. There are a lot of yesteryear big names that are not paying back. So private company fixed deposits, a different cup of tea, but everybody falls for it because they think it's as safe. Older generation, 60 plus, most susceptible to FDs. Why do they go and invest in FDs? Because you're living on your savings, right? So that 2% more or 1% more is a big attraction. And we keep saying that don't fall for higher returns. If it's 3% higher, don't touch it. There is a problem. If it's 3% higher than a 3-year bank FD, then you can be sure there is a catch. So please don't fall for it. But when somebody says you're getting a higher return, the question that you should ask is why? Because remember, these are all in business. When you are in business, you want to borrow at the lowest possible rate. You don't want to generously, you're not running an NGO. You don't want to give 2% more to anybody if you can borrow at 2% less. So when you're paying 2% more, there is that much more risk attached to it. Otherwise, you will not pay that much more money. Now, if you do a private borrowing, you know that your neighbor has this big house, he can return your money. You do a one-to-one decision based on what you know, it's very different. That's a risk you may take. He may offer you 20% and you may decide that you want to trust him. You may go wrong. But you're doing it more out of family reasons. I'm not getting into that. But if you're doing it with a company that you don't know, because a financial advisor or an agent tells you, yeah, chai le lo, be careful. Okay? Because more returns doesn't make it safer. And you have to follow the results of the company. You have to look at the credit rating regularly. You can't buy and forget. And if you see a decline, if I were you, I would get out of it and think afterwards. Because when stock prices start falling, when net profits start falling, why take a risk with your money, right? The goal is keep your principal safe.
In terms of the safety, would you
Mike.
regard Citibank as the same level as SBI, let's say, which has an informal sovereign guarantee?
Get the mic.
Yeah, my question is this. Suppose I have an option between Citibank, which is an overseas company having operations here, and State Bank of India, which has a sovereign guarantee of sorts, like you said. What would you recommend and why?
You know, if you ask me, my money is with Indian banks, okay? In the hierarchy, definitely anything that's a nationalized bank is the safest, undoubtedly. But you know that service quality. So you know what you're sacrificing because you're with a nationalized bank. So if you choose a nationalized bank, you choose safety over service. So you're willing to forego something. Ideally, split it. So you want service, you want easy access, you want your credit card and things done. If you ask me between an Indian bank and a foreign bank, this is my personal view, should not actually come here. But if you are with a foreign bank, you just pay so much more for everything. Okay? So if it's a choice that you're making. Today, by and large, if you are a platinum customer or whatever the highest nomenclature for a private bank in India, you get the same red carpet that you would get from a foreign bank. And you would pay much more in a foreign bank. So it's a choice that you make. I know that people still insist because they say we travel abroad so much, we have this comfort level, and foreign banks offer a lot of other services. In fact, today one of the biggest reasons people keep money in foreign banks is they help you to open Swiss bank accounts from here. Okay? They help you transfer money. They help you create all kinds of illegal accounts which they openly come and market to you. So some people do use that as an option, and that is a convenience that they value more than just services and charges. Okay, so this 100% guaranteed return is one of the most dangerous thing, and I have known lots of people falling for this. I know a woman who invested in oil derivatives. I was so shocked when she came and told me because she didn't look, she runs a very, very high-end restaurant in Bandra. And I mean, I said, do you know anything about Forex, oil derivatives? And she said, no, beta, this smart chartered accountant came to me and he said, Auntie, you've just sold a flat and you know, you put your money here because you'll treble it and then you can pay capital gains and you have nothing to lose. And he, you know, he used to call me up every day and say, "Aapka itna upar gaya and utna upar gaya." One fine day he stopped calling. She didn't initially notice it. 3 weeks later, she says, "Why isn't this guy calling?" So started calling and realized that 85% of her capital was gone. Okay, will it come back? No. You can keep crying. You can. I have a doctor in the other who's lost 1.6 crores. I know of somebody who worked in an airline company who left, started another business, 65 lakhs, which was the life saving she got, invested like this in the market, all gone. And I'm sorry to say, some of these things, even Moneylife can't help you. Because if the guy who's invested it makes a wrong decision in the market and the money is actually lost, what are you going to get? You know, you file a complaint, the guy is locked up in jail, he spends 6 months, comes out on bail, but he doesn't have the money. The money is gone into thin air and nothing can get it back, right? So guaranteed returns is not something we advise people to look at. And the bottom line is this: if it's too good to be true, it usually is, okay? Anything that is sold to you as this fantastic investment, and believe me, this is the largest area in which Indian men and women lose money, a variety of Ponzi's, nothing to do with regulation, nothing to do with banks going bust, nothing to do with fixed deposits. They tell you chain marketing schemes, pyramids, all the same names. You get 2 or more people to come and join the scheme. So whether it's a QNet, a Speak Asia, a Tupperware, an Amway, the reason to emphasize it here is these are all businesses which have women as the first focus. Because they tell you you're at home, you have a kid, you can earn enormous amounts of money, Amway global liaison person has sat here in this office and told us that it is a fact that Amway cannot be an alternative career. It can at best be pocket money if it's done right. Okay? And it's not done right. They lure you, they make false promises, they make you buy all kinds of nutraceuticals which you can get at half the price if it's not Amway. And the businesses are modeled in a manner to enrich the company and not you. This is a subject on which I do an entire session. So I'm going to run over it quickly. If you have questions, stop me. But otherwise, I'm going to go through this really quickly. The returns they promise can be 24% to 100% or more, right? And they don't materialize. Now, this is a picture of 10,000 people sitting outside Crawford Market police station because they all invested in a company called City Limousine in 2003. Nobody's got their money back. Our friend Masood has now jumped bail and run away from the country. This is a guy who made the most patriotic film called Chak De India, which we all went and saw and had tears in our eyes. But this is what he did to people who invested in his company. And look at this. This is the main thing. When I said it's not about women, it's about everybody. 6,000 policemen, 200 income tax officials, 15 RBI officials, 300 people from Mantralaya. These are the kind of people who had invested there. And I keep saying that when they arrest the guy, whatever cash they have, this is a group that first ensures that their money comes back. Okay? So while they're pretending, they're arresting, so you will find the same thing happening with National Spot Exchange. And I keep telling people, you've invested in something that's unregulated. This group gets their money out first. Okay? The rest of you, the guy has gone away from the country. Somebody is filing a case, which means you're throwing more good money after bad. All these companies collect over 1,000 crores in a jiffy. In fact, we keep saying, we joke internally that our name is Moneylife. If we just put a board out here without even advertising saying 25% return, I'm sure there would be a queue all the way down to put their money with us. We get calls asking. Because the minute somebody promises a high return, we are running there with our checkbooks without asking questions. And this is how the majority of people lose money. Those who in all these pyramid schemes, I've had people here arguing when I do these sessions saying, I think you're all wrong because I've got my money back. I think you're being unfair to them. Okay? Speak Asia, we got abused so much. I don't think I've got abused so much even after the Harshad Mehta scam. But just go and look at the comments on our website. It's there to see. Because they said we're being wrong. Has anyone got their money back from Speak Asia? No, right? And the people sitting here who went and opened those 11,000 rupee accounts, the journalists who opened them, I know TV anchors who put 1 lakh into Speak Asia didn't want to believe it until it all began to unravel. Because the point that we make is high returns are not sustainable. They take your money and they pay it back to you. In fact, the guys who come in early, they get their money back. Why? Because that is the way the net spreads. So the biggest endorsement is someone saying, yes, sahi hai, I've got my check. Okay? So 3 months, if you've got your money doubled, so many of them say in 3 months we'll double your money. In 6 months, you get your principal back. 6 months, you're able to show a check, you can get 25 people to part with their money. Right? That is part of the scam. That is part of the design of the scam. So don't come back and say, I got my money. And in fact, if you get your money, what do? You put that money back. You go and pull out your fixed deposits also and put that as well. And when it goes bust, you're fully wiped out because you trusted it, you got your money back. So everything that you have, you probably even bet your house on it. And that's the extent to which you can lose. And believe me, people are being bankrupted by this. The Sharda thing, 23 people committed suicide, right? There is Rose Valley. SEBI has finally stopped it. It's under enormous pressure from us. You go to any barista or cafe coffee day, you see some smart aleck convincing 2-3 gullible types to invest in QNet. I know people who have left jobs in Infosys and other companies to go and join this damn scam. And I was sitting in a cafe coffee day down the road 2 weeks ago, and I saw 2 QNet spiels going on 2 different tables. I was so tempted to go up to them and say, stop listening to this garbage. But I think they would have beaten me up rather than listen to me. So I just kept hearing, and I finally said, okay, let's go out of here before I sort of lose my cool and try and advise them and then get beaten up in the process. But believe me, it's as severe as this. Huh? Don't take it lightly, and don't think that it's not happening. I'll tell you, the numbers are quite frightening. This is a global survey. It's an article that we wrote, I think, a couple of weeks ago. And look at the first line. Smart people are easier to cheat because the more mumbo jumbo you give them about, complex mathematical stuff, they think they understand all of it and they're putting more money there. I told you about QNet. The number of people that you will see from big software companies investing in QNet. The head of AC Nielsen in India at one time left his job and went and was a big distributor for QNet. He even came here to persuade us not to hold seminars because we were doing something wrong. Okay? Then there is what we call the Nigerian scam. Has anyone heard that? All of you know, right? The African dictators whose wife is writing to you wanting to give you $25 million. Now there are 100 variations of this. If it's not an African dictator's wife, it could be Satyam's Ramalinga Raju's wife. Very soon you will see Rajat Gupta's wife writing to you. Okay, every big scam name that you can think of, you're getting emails in their name. You're getting emails in the name of the RBI governor, Raghuram Rajan. In fact, if you look at his email, he's got a signature at the bottom which says, RBI does not have escrow accounts for people, RBI does not hold money in deposits, because this is his way of saying, and they clone even the RBI email ID, so that it seems like an rbi.org.in ID and there's another ID behind it. So if you do not deserve the money, nobody is giving it to you, okay? So if you get something which seems like the income tax department is giving you a refund when you haven't even been paying taxes, obviously it's not true. So if the RBI writes to you saying that they're giving you something in an NEFT and give your bank account details, you know it's not going to happen because there's nothing you have done that should deserve a lottery like this. The biggest is the lottery. Canadian lottery, Australian lottery, nothing is less than 20 million. But it is the fastest growing scam in the world. India is a special target. The Nigerians have come here to the suburbs and formed what is called a Nigeria Wadi. So they're even scamming sitting right here. You don't have to go to Nigeria. Amounts, as you can see, are huge. They promise everything has a standard pattern. They say you're going to get something. In order to get it, you have to pay something as an advance fee. So globally, they have started calling it the advance fee scam. So anything, they'll say you're invited to a World Bank conference. Why should you be invited to a World Bank conference, say on energy or environment, when you have not even a nodding acquaintance with it? Don't ask, but you will get a very, very authentic looking email. And it says your hotel and your air ticket will be taken care of. All you need to do is send $100 as an advance fee. If you're gullible enough to send $100, and the next demand comes up. If you're gullible enough to pay that, there's a third one. And people have landed up even going to Nigeria to try and recover their money. It does not come back. In fact, I am associated with a consumer organization whose head was called the Ralph Nader of India. Believe me, he put 35 lakhs of his own money. And I think it's an age-related thing. He had no idea about it. And he thought he was going to take this money. He was not going to pocket it. Unfortunately, we kept arguing that, why should an African dictator's wife give money to us? What have we done to deserve it? But his objective was to build the consumer movement and ensure that we don't have to raise funds again from anywhere. 35 lakhs personal savings gone. And, of course, loss of reputation, whose cost was significantly higher than that 35 lakhs. The next thing is secure your future. Okay, I told you the 4 or 5 things I'm going to cover. So I said insurance is one thing that you need to have. Wills and nominations is something that you need to worry about. So when you talk about insurance, lots of people say, I have life insurance. Life insurance is really not for you, but it's for people whom you care about, your loved ones, right? A lot of people don't even know this. They think that life insurance is going to protect them. Life insurance is not about you. It's about somebody else, okay? Second, it's not enough to have the insurance. Your biggest worry should be, do I have an insurance which will actually be paid? If it's life insurance, there's nothing much you can do because you are dead and gone. Whoever else has to deal with it, if they are going to apply in time, then it's their worry, not yours. But you need different kinds of insurance. You need medical insurance, which is the trickiest one. You need a personal accident insurance, which is most affordable, and it's a lease that everybody should have, okay? In fact, we recommend that even people that are dependent on you, like say your domestic help that you care about, who work regularly for you, you must get a personal accident insurance for them, because the amount of premium is pretty low. And if you have any questions on what, how, why, just write to us afterwards to the insurance helpline and we can give you an entire cover story on it. Property insurance covers a part of the assets you have, but theft, more than anything else, fire, because a lot of times it's out of your control, you need to have property insurance. And if you're going abroad, you must have travel insurance. And in all these, the fees can vary enormously. And the key is to be able to get the right insurance and insurance that will actually be paid to you when you want it. Now, I'm just going to spend a few minutes. Like I said, I'm not getting into details, but what you need to know. When you're making an investment, the principle that applies is caveat emptor, which means buyer beware. You have to look at the fine print. You should be careful about what you invest in. When it comes to insurance, virtually the opposite applies, okay? Which is the insurance company is taking you on utmost good faith, because the insurance company has no risk. It is collecting your premium, right? So why should it not want to look at you as this very honest person who's making complete disclosures correctly? They don't have anything to worry about. They have to worry the day you make a claim. So it starts from whether you made that claim, whether you informed them in 24 hours or not. So if that is there in the fine print and you haven't done it, it's your problem. If you haven't, it's a death and you haven't made a claim in 15 days and you say you were too distraught to go and collect a death certificate, that's your problem. If you haven't put your facts in properly, that is the stage. The day they get your papers is when they take a magnifying glass and start checking every line to see whether you've done anything correctly. So your date of birth was a little wrong. Your insurance agent says, "Tere to insurance to aa gaya na, you don't have to worry." That is when you need to worry. Otherwise, your premium is gone. And you would be surprised how many people lose enormous amounts of money paying premium year after year and don't get their claim when they actually make it because of tiny little mistakes. So anytime there are insurance agents who have told people who are 60 plus, Bibi ke naam pe le lo, no problem, she's 53, she'll qualify. It's not meant for her. So again, the claim is not paid. So anytime you're told, forget something, dump that agent immediately. And I know very well that every agent is a close family friend, okay? That's how you trust them. But if they start saying fudge, disregard, don't bother, just throw them out. I think more money is lost to insurance after the pyramid and Ponzi schemes. The second biggest losses in the last 20 years have been on wrong insurance. Beware of celebrities. Okay? Child insurance is a cover story. If any of you have bought child insurance, I would urge you, write to us, read the cover story. Entire villages have been sold this child policy because Sachin Tendulkar ne kaha, and how can God ever be wrong, right? People went and bought it. Child insurance works if you actually die. I'm sorry to sound so crude about it, but if you're alive, believe me, there are more options. So if within 4 years after you bought a child plan, you pass away, then your child is really secure. But if you're going to live 20 years, you could have put that premium, because in the first year, 90% in some cases go off as administrative costs. Nothing goes into the premium. So if you're going to live, and I think there are so many alternative ways in which you can keep your money nicely invested for your child, designated for your child without worrying about child insurance. This other one, these are all my favorite stars, okay? But believe me, be big fans, but don't go and buy insurance because they tell you to. The Amitabh Bachchan ad says 2 minutes. We keep saying it's not Maggi noodles. I mean, I know a guy from Goldman Sachs who has 3 children who called an agent home, spent 2.5 hours and was so frustrated. He said, okay, now leave the documents and come back 2 weeks later because I need to study them. So if a finance expert doesn't understand it, where's the question of telling security guards, sirf 2 minutes, please do not buy insurance like that. It's the wrong way to pick up insurance. This guy, okay, most dangerous, because he's so brilliant as an actor, he convinces me much more than Amitabh Bachchan does, okay? Because he's like you and me, and he's so good. So what did he say? Kam insurance lene ki bimari. Do you remember? Now there are these nasty people like Moneylife who actually go and check, ye kam insurance lene ki bimari hai ki nahi hai. So we went to that insurance company and looked at the payout numbers. My colleague Raj Pradhan is a real expert. So he dived into those numbers and he discovered the least payouts are made by the company which says, "Kam insurance ki bimari," which means buy a bigger insurance, but they're going to pay out much less because they're going to nitpick, right? So instead, it's better to have kam insurance ki bimari than go and buy big fat insurance that you're not going to get. So insurance, it'll take you 10 sessions, okay? In fact, we set up the insurance helpline because we realized that I do a 2-hour session, you're going to start yawning about insurance and you're not going to learn enough. You have a problem, write to the helpline, that's the fastest way. So don't worry about whether you understood too much here or not. At least you know where you can go. This is something you should be aware of. It's called the Married Women Property Act. It's an insurance that is very useful for people who are in business, people who have high borrowings and high risk, because when they buy an insurance in the name of their wives, it becomes like an automatic trust. Even the person who buys the insurance and pays the premium can't touch it afterwards, can't alter the terms, and the benefit goes only to the beneficiaries, which means that no creditor can come and make a charge on it. The money definitely goes to the wife or the children for whom it's bought. Awareness about this policy is extraordinarily low. Don't ask me why. But any insurance that you want to buy, you can tell people, and it's really very useful for people who are in business, okay? Because the rest of us don't have such, risks and borrowings where creditors are going to come and stand at the door. That's why I said it's more important for businessmen. You just need to say that I want it under the Married Women Property Act. When you particularly ask for it, people will tell you more. Now this key area where women are concerned, okay, a series of stories I'm going to tell you. Every one of them is 100% a true story. Starts with this. Truly dangerous words, tell me where to sign. Okay? Remember, it's your signature. Every signature that's demanded from you has a reason, and you're not going to sign blindly. So, what are the kind of emotional traps women usually fall into? Borrowing. They don't know what the husband has borrowed, so it affects the entire family. Keep saying you must know what is the family's liability and what is the income. Home loans. Women are asked to become co-applicants. Okay, so a lot of times when you say that, but I don't work, so why is the woman signing? They say, oh, don't worry, nothing. There's no liability, there's no problem. You're just signing. There is no signature that's required unless there's a liability. The reason why home loan companies ask you to sign is there are a whole lot of clauses about the rights that they have on the property. And it means that you are agreeing along with your husband that if something goes wrong, you are as liable as him to repay the loan. And if the loan is not repaid, the consequences of not repaying that loan are going to happen to you. That time you can't run to a court on humanitarian grounds and say, I didn't know, because you've signed as a co-applicant. Okay? And if you are going to sign as a co-applicant, I keep saying at least become a co-owner. So then you insist that the house should be in a joint name, because along with your liabilities, you should have some rights. And women hesitate to ask this. So the loan is in the name of one person, the house is on the name of one person, but the borrowing has your signature on it. Something that you have to be aware of. It has huge implications for EMI, credit card. Every time you do a joint borrowing of any kind, I mean, most of the time we look at it, the husband has a credit card, the wife is allowed to use it. Lovely state of affairs. Okay? But when the couple is working, you have to remember that his borrowings affect you and your borrowings affect him if it is joint. If it is not joint, no issue. But anything that's a joint borrowing has implications for both. This is really important for homemakers because they shouldn't say, I didn't know. Husband had a loan, gambled the money, lost on the stock market, affects me also. You have to be aware of it. Wills and nominations, I'm going to come to that. There's a whole lot of reasons why these two are really important. And one thing that we keep telling people is whether you are a working woman and actually even a homemaker, please have one separate bank account of your own. Working women, 100%. Even if you want your husband to invest, make sure it goes through your single account and then passes on anywhere else. But even homemakers, we suggest have one bank account separately. People who are 50 and above especially must remember many of us Hindu marriages, even Muslim marriages, are not registered. Now this registration becomes more and more important over a period of time. because this certificate that you have, which you can register your marriage at any point of time. You just have to go to Bandra or Custom House and register it. It becomes like a certificate. Even if you register your marriage when you have 2 kids, you can put the names and the photos of those kids and get that certificate. For succession and things, it becomes a very important certificate, and it's worth having. Want to know more? Write to us again, or Google Moneylife. We have written a whole article on this. I'm not going to spend more time unless someone has a specific question. Okay, keep track of your income. Now, this is a true story. Woman was a nurse, earned her money in cash because, at the end of duty, she gets paid the cash. Husband was a part-time singer, gave it to him. Bank account is in his name. They buy a home in his name. After it's all bought, he throws her out. She doesn't have one document to say that all the money was hers. Forget about even half of it, out on the streets. Even the best, soft-hearted lawyer, and this story came from her lawyer, there's nothing much she can do about it, and it's like a 20-year fight. So when we talk about, this is all under emotionally messy investments or, emotional mistakes and traps that women make. Now this is another story, this is a true story, okay? Woman is working, husband has a temporary job. They decide, as happens with all youngsters today, the first thing you want to do is pull your income, look at how much you can borrow, then decide that's a limit for your flat, and the first investment you want to make is a home, right? So they did that. Husband is a contract employee, so obviously all the lenders said no. So she was the primary borrower. Amount was still low. So her father-in-law comes up with this brilliant idea that his brother earns more, so buy the flat in his name. I mean, nothing can be more disastrous than this, because a woman has the borrowing, she's going to pay, the flat is going to be in the name of the father-in-law's brother. I mean, it's a huge risk. And if any of you sit down here and say that, but it's family, but we all love each other, real life has a lot of different stories, and I'm going to tell you some of them, okay? This is one. They pulled their income. Again, half these stories are from divorce courts. Some of them are in this book, some are in other books. They pulled their income. The guy says, my parents are going to live with us, so why don't I spend all the money on the home, and we'll put 75% of your salary into EMI. Okay? They buy the house, everything, the loan, the EMI starts getting cut, she's thrown out. So she's running to court, and she's earning 25% after doing a full day's work. The bank says, I'm really sorry. We feel very, very sorry for you. You have all our sympathy, but there's no way we are going to stop deducting even 1 paisa less. Because as far as they're concerned, the EMI is in her name, and there are 0 concessions over there. I mean, believe me, you will see the tough side of bankers when something goes wrong, and I don't blame them, because there's nothing that they're going to do. No individual is going to take the risk of saying, I will not recover that money. Gold loan, okay? Huge number of advertisements. They say you get your gold in 3 minutes. We did a lot of work asking people, what do you understand about gold loans? Okay? And you have these gooey advertisements about the mother giving her gold, the son coming back from abroad and returning it. And it's a load of crap, okay? Because why will they not give you your gold loan in 3 minutes? They're taking your gold, right? And they're giving you less than 75% of the money against the gold. What do they have to lose? They have your gold, they're giving it back. So simple question I ask people is, why 3 minutes? They should give it to you in 1 minute, because they're taking your gold. That means you're going to chase them if you want your gold back. They are keeping more than the value of what they give you. Second, you're paying interest on the money that you have. Third, I keep asking people, are you a princess? I mean, is this some kind of family heirloom that has come down? Is it a Kohinoor diamond that you're pledging? No, right? It's gold that you bought 5 years ago, 10 years ago. Most women, in fact, go and dissolve the gold and keep making new ornaments. Don't all women do it? So why would you pledge the gold? Sell it. You're going to get the money. At least you're not paying interest on the money that you have, right? But nobody thinks about this. 3 people in our tiny office, we have had to advise saying, please do not take a gold loan. because sell the gold instead. Don't pay interest on your own money. Don't pay interest for nothing. And start buying back whatever little you would have paid as interest. Even if you start buying back 1 gram of gold every month, you're going to ultimately have that gold back. So at least don't pay interest when you don't need to. Interest is high. God help you if the gold price fluctuates. If it goes down, they start asking you for more money. We are very lucky. It has not happened in India. And I think that's a whole session that Devashish does separately about why in India alone, because of foreign exchange prices, gold prices have not come down in rupee terms for us. Globally, gold prices fluctuate in a big way. In India, they don't, because every time gold has come down, our rupee has weakened and we haven't paid less. But God help you if it goes down, you lose your gold, you lose the interest that you bought, and the lender has zero risk. Okay, now we come to wills. Most women say we don't know how to ask our husband about wills because it almost seems as though you are wondering whether he's going to live long enough or he's providing for you or not. I think bring them to these seminars so you don't have to tell them. We are here to tell them about it. Okay? So make a will because what is his is not yours. So when you start, India has nuclear families, you think that you are a co-owner under the Indian Succession Act. This is how your property is divided. And it's a fixed thing, okay? The Succession Act is very clear. So suddenly, one fine day, if you're a nice family unit of 4, you consider yourself an equal of the husband. And if you're especially a homemaker, you're more affected because if you're working yourself, you have your own separate income. Suddenly, the equation changes because you are at least just one of the 3 along with your children. It gets divided 3 ways. Now, if you are a Muslim, it gets even worse because the wife gets only 1/6, okay? And even between the son and the daughter, it is different. And I don't know whether you've read in Mumbai Mirror the stories about Sarah Banu. It is all about inheritance and not about anything else. So the best way is to put it down as a will. It's very, very simple to do. Anyone of a sound mind can make a will. Sarah Banu's problem is that her husband is not going to be considered of sound mind today. So it's important to do it at the right time. It can be on plain paper, it can be handwritten, it needs to have 2 witnesses who sign in front of each other. Every page has to be signed by the person, the testator, who's making the will, and initialed by the witnesses. They don't need to know what is in the will. And no stamp duty, registration, or anything is required. Okay? Now, this is very simple. If you want to know more about wills, come, long session, because while it's all easier said than done, you have to choose your witnesses carefully. You have to choose your executor carefully because somebody has to execute whatever it is that you want done with your money after at the end of your life. And the third thing is that you can only will what is your self-earned money. But today, everybody has plenty of self-earned money. And I think it's even more. Every time we announce a session on wills, it's packed. Okay? And in fact, we have to close the registrations because in the last 10 years, enough of people are earning enough money that they want to bequeath. So while you can't will the Taj Mahal to anybody, we still have enough, at least the flat that you're living in, which needs to go to someone. It can be revoked, so don't worry. It's not like your last statement. The reason it's called last will and testament is because you can keep rewriting your will every day. We have one expert and advocate who says that his grandfather used to keep writing his will every single day. Okay, so no harm. If you have nothing to do, update your will every day. So she smiles at me, she gets a little more. She's all the time scowling, she'll be cut out. So you can do that, you can have fun. The last will is the one that will matter. Before that, you can make sure you date it so that people know what is the last will and they don't have to fight over that. Or you can update it with a codicil and don't worry about what if I keep earning a lot more money, what if I get a big lottery after I've written my will. You can have a residual clause that takes care of it, so you don't necessarily have to keep updating the will every day.
So registered will then?
Registered,
can be changed?
Yeah, it can be changed, but you have to go and register the next will. You don't have to, okay?
No.
All that happens is that registered will is a little complex. People recommend that you should register the will. Okay, but as you said, having registered it, what if there are big changes and you want to change it? Then you have to do two things. You have to ideally go and re-register the next will. So you go back and say you're revoking the last will, this is your last will and testament, and register it again.
No, if
Right.
it is the registered will and if it is written, this is the last will.
It doesn't matter, the date matters. So you've done one more and you call it the last will. In that, your first line would be, all previous wills and documents that I have written are hereby revoked, and this is now my last will with this date. So that doesn't matter. And if you have not registered it also, it's okay, except if the people you're leaving your money to are going to fight with each other, then the guys in court, so if you've decided that you are disinheriting someone who was there in the registered will, they're definitely going to fight in court to say that is the true will and the second one is made up. So ideally the second one should also be registered, but not necessarily. And if it's fairly amicable, there's no issue at all. There's a problem if there is a fight.
What is the difference between a codicil and a residual clause?
Codicil is when you want to add to the will. Okay, so you've acquired another house which is not there, you want to add to it. So you can either put in a codicil saying that I've acquired this property and this is who it's going to, or I had earlier in the will said that it's going to her, but now I don't like her anymore, so it's not, but put an explanation. Residual clause is that you're continuing to earn money, so then you put a residual clause that this is the will and these are my assets as of now. Anything else, anything further that I earn, any more addition or subtractions to my bank account will all go to X, Y, or Z or be divided in this manner. So that's a residual clause.
If a person dies intestate, what's the validity of a nomination? Let's say you nominate somebody in a cooperative society, okay, and you die intestate. What's the legal validity of that? Can anybody contest it?
See, a nominee is not an heir. In fact, I'm coming to a lot of nomination-related issues after this. So a nominee just holds the property in trust for a legal heir. Okay? But the property, and especially if it's a bank account, the cash can be transferred to the nominee and the bank is well within its rights to hand it over. Now, if the nominee is not the legal heir and there are 3 legal heirs, they can fight and they can demand a share of the property. But what we advise is that be really careful about your nominations and make sure that your nominee is somebody you want to leave that to. And have multiple nominations. So if you have 3 properties and you want to leave them to 3 people, nominate 3 of them separately instead of putting everybody as a nominee on everything, because that is definitely a recipe for fights and controversy. So you have to do the nomination carefully, but a nominee is not a legal heir, and the legal heir's rights are primary, except in Maharashtra for shares. There is a little stupid judgment which has been challenged. As of now, there's a Roshan Dalvi judgment which says the nominee for shares is superior to an heir because of the wrong wording of an amendment to the Companies Act, which has still not been corrected. So other than that, nominee is not superior to a legal heir.
Suppose any changes made to a registered will, can the codicil be registered or should we register the entire will?
Ideally, you must register
The entire will.
the codicil you'll have to rework the will. So you have to just register the codicil. You don't need to register the will. Will is already registered. Okay, now I'm talking about importance of nominations. Now, when it comes to your bank accounts, you have nominations. Please definitely make use of it and check regularly to see that the right person is the nominee. I'm going to come to it. The nominee, as I was just saying, is not necessarily the heir. Avoid nominees that you don't want to leave your assets to. I mean, believe it or not, we've actually had somebody writing to our legal resource center saying that his father decided to have his friends as nominees rather than his family. Don't ask me why. And he says, how do I fight? Because none of them are now willing to give the money. So you can file a police complaint, but believe me, it is so tough. And don't ever make these mistakes. Don't say your business partner is a nominee for your personal savings account and they look after your family. Please make sure that it is your family that is named. Because I'm giving you some examples. These are 2 real stories. The first one is a city banker, really high profile guy, dies at the age of 45. wife discovers that all his accounts were in one bank with one nominee, which was his brother. They had stopped talking to the brother 10 years before the person died, and he made a claim. And this is a city banker who stood here and said that, our heart went out to the woman. They said, all we did is kept delaying it and kept telling the guy, no, you haven't got this and haven't got that, to give her enough time to go to court and file a caveat that he shouldn't alienate that money. Because remember, it's cash, okay? So it's all very well to say on paper that a nominee is not the legal heir, but if you have to fight in an Indian court, you're spending money, you're emotionally distraught, and it's going to take 10 to 12 years to get anything back. So get your nomination right. The second one is even worse. Guy dies at the age of 30, he's got a wife and small, and believe me, ask any banker, they'll tell you 60 to 70% of guys do this, which is why it's up to the women to check what the nomination is. The nominee is either their mother, because when they've opened their bank accounts, they are not married. So it's very sweet, it's in the name of the mother. And I think it's a good thing, but usually by the time the problem arises, the mother is not even there anymore, okay? Or it is some older brother or whatever. Here it's an older sister. And she actually made a claim. So we keep saying majority of disputes, majority of murders, all kinds of things are to do with families, within families. I mean, you look at even crime, 60% of crime is people known to you, family or friends or neighbors. So when people say that my family is very close to me, I'm not saying start distrusting your brother or sister. Just be sensible about your money. It's your money, right?
One question here on the previous slide.
I just go with this one, okay, because it's the most scandalous. Here, the guy had over 1.44 crore in his bank account. He is divorced, okay? His wife has remarried. He died within a year of the divorce, and his mother discovers with that kind of sum, the ex-wife was still the nominee. I mean, I find it so shocking that his lawyers did not check this, but somebody should have checked. And his mother, I think, fought a 3 or 4 year court case to get that 1.44 crore herself, because the ex-wife, I mean, who doesn't want 1 crore of rupees, right? And if you can fight for it, and a lot of times what happens, the mother fought it out. So obviously she didn't need money for sustenance, but otherwise she probably would have told her, okay, I will give you half of it, but let's just get it out and settle it. So in any case, she would be the loser, right? So nominations are really crucial. Please pay attention to it. When we talk about financial hygiene, we say at least go through your accounts and ensure that it's updated. You will be surprised how many banks routinely, when you update a fixed deposit, they'll drop the nomination. Okay, you have to keep ensuring, is it there? Is it registered? If it's not registered, put it in, and don't say I've registered it once. I've had to go to the CEO of the bank that I bank with, because every time I renewed my FD, it would drop off. I finally said, I'm going to write to the RBI if you guys don't take care of this problem. And it was a problem with their software. So please check. Sorry.
Yeah, my question, going back to the earlier slide, you see, in both the cases, like you said, nomination is just, a nominee is just a custodian, right?
Right.
If that is true under law, then Preeti or that Ganesh's wife should have got the property, right?
Of course she'll get it. But, see, suppose I'm Ganesh's sister. I've got maybe 1 crore if I'm lucky. I've blown it up. Okay? Now you take me to court, which means this poor woman with 2 small kids, no job, is going to find a lawyer, is going to go to court, is going to spend 10 years fighting, spend more money on the lawyer to fight the case, and at the end of it, if the guy says, I have no money, I've blown it up, what do? Because it's cash. So if it's bank accounts, you have to be that much more. Now, in the first case, because the bank helped this woman, they did not release the money till she had time enough to go to court and get an order to say that he shouldn't alienate the money, which means that he can't spend it. So he gets it, she will fight it out, but at least she ensured, because of the banker being proactive, that he didn't get the cash to withdraw and take away. Easiest thing you do is withdraw the cash, okay? And then you can keep chasing the person, say, I don't have it. Okay, so simple protection measures, like all this we've gone through. So just to recap, if you're a joint signatory on a home loan, you know that there are liabilities. Try and be a joint owner. Ensure that you're the sole nominee on flats and FDs. Now this is really important, okay, because we have done any number of sessions here on wills and nominations where a lot of men stand up. The question that, the most popular question, how do I ensure that my wife gets to occupy the property but I want to leave it to my son? I mean, one day I was irritated enough to say, why is it that you won't leave it to the wife? Okay, she gave birth to those kids. She will anyway leave it to them. She's not going to run away with someone else. So why will you not leave the property to her? Because she should be your first equal partner, and anyway she will leave it to the kids. But so many people ask this question. There is no such a thing as my wife will get to use the property. You can put it in. There's nothing to stop you saying that. But there's nothing to stop your children mistreating your wife when you're no longer there either. So if you really care, make your wife the first nominee, or put her as the first beneficiary in your will, because I keep saying she will be as or more concerned about your children than you are, certainly not less concerned. So you can start by trusting the wife.
No, but if I were to play the devil's advocate, in the earlier case, the fear is this. The fear is this. So I mean, I don't want anybody misunderstanding me. The fear is this, that if, let's say, the husband dies, you have the wife and the children, and the wife remarries, what happens then? It's the same case like you talked about, that Karnataka High Court case. See, nobody can guarantee which way the life is headed, right? So when somebody is saying that she has to have the lifelong right to utilize the property, and then it goes on to the son, there is a fair amount of discretion or judgmental discretion that he's taking.
Depending on, you got a point.
I mean, please, I'm just playing the devil's advocate, like I said.
You got a point, but these are all the exceptional cases. By and large, the questions that are asked are people who are 60 plus, whose wives have lived 40 years with them. Okay, so I think I come from there, but you have a very valid point. No arguments there. Okay, fighting for justice, like I said, without documents is a long and expensive process. Next section is on credit traps. Main issue is here credit cards. It's another reason why people sort of lose a lot of money. One question that I usually ask people is, do you need a credit card? What do you think? No? Okay, so the guys who say yes, I agree with them, because in certain situations, when you don't have the money, you can't borrow, there is absolutely no alternative to a credit card. And I keep giving the example, you're flying Kingfisher, you have a valid ticket and the airline just stops working. What do? You're at Delhi airport. I mean, can you look around and say, will you buy me a ticket back? Nobody is going to give you the money. The only thing that will work for you there is a credit card. Or you have certain kind of emergencies, you want to rush someone to a hospital. Are you going to look around to say whether you have that 10,000, 15,000 for admission, or will you carry a credit card, at least to the hospitals that allow it? Certain situations, especially if you are stranded abroad or in another city, there is no alternative to a credit card, and I think you must have it. Or a debit card. Okay, so let's not get picky on that, but at least a debit card. Yet, when Dilbert says credit cards are the crack cocaine of the financial world, good reason, because most people whose credit scores are decimated is because of credit cards. Why does this happen? Because people, I'm not going to show you this ad, but most people lose a lot of money because they don't understand the mechanism. Credit cards do not carry interest of 18 and 20% as they claim. They have admitted before the National Consumer Disputes Resolution Commission and in the Supreme Court that it goes up to 40 to 65% and sometimes 70%. Okay, that's the kind of interest you pay. If you roll over your credit, people don't understand. They think a credit card means everything has a 40-day cycle. You'd be surprised how many people think, I buy today, I have 40 days to pay it. I buy next week, I have another 40 days. Doesn't work like that. There are billing cycles in which the money is done. Which means that if you buy at the end of your billing cycle, you may have just a week before your payment is due. So if you know what your billing cycle is very carefully and are timing your credit card purchases is one thing, otherwise you have a serious problem. Now if you rolled it over, if you notice all the literature says you have to pay just 15%, and a lot of times that just 15% gets stuck in your mind, you remember that remaining 85% is going to carry this interest. And if you make a purchase after you have rolled over, then this high interest rate is applied to the whole thing. You don't have credit anymore. Okay? It just gets clubbed and you're paying that, which is why if you notice, it escalates really fast. There are youngsters who come to us and say, but I just went to Goa. I mean, just one trip. And then I had this birthday dinner, and it was just another 5,000. And why is it that I suddenly owe 60,000 bucks to the bank? Because it's like a geometrical progression in which it gets added and there is high interest rate. Then at one time there were so many of these ads which said, use your credit card like an ATM card, right? So people were withdrawing cash. And do you know that the cash has absolutely no billing cycle? The interest rate starts that day. And as somebody in a credit card company, I didn't know this, okay? Someone who came here said, cash is adjusted last. So you either have to go and pay it separately, or it's adjusted. If you have 4 or 5 borrowings, the rest of it is adjusted first, and your cash remains outstanding till the end because they earn the most on it. So a credit card company, these days they at least charge you some fee of $300-400 bucks, which pays the value of your card and the statements that you get. But if you are one of those people who pays diligently at the end of every billing cycle, you are not a popular customer for the credit card company because they don't make money on you. Okay? They make money the minute you forget to pay. And that's why their entire process, you remember the MasterCard priceless ad? That was the ad that I had, but we are short on time, so I didn't show it to you. The whole priceless campaign is what the credit card business is all about, which is spend on something that you don't have money for so that you roll it out, so that they earn money. And if you have the money and you pay it back on time, then they tolerate you, but you're not their favorite customer. All this, finally, my last section has an impact on what is called your credit history or credit score. The last 20 years, every time you borrow, if you have a credit card, even if you go and shop for different options, all of it gets sent to what is called a credit bureau, which tracks it. Some of them have a complex algorithm. They convert it into one number, which is called your credit score. If you have a high credit score, it is an advantage. When you apply for a loan, your loan gets sanctioned really fast. In countries like the US, you can negotiate a lower interest rate. And flip side, you have a bad credit score or you have a default, you can't borrow any money at all. And a lot of youngsters, this is really important for younger people, because we've had youngsters at our seminar say, well, I've taken an education loan, but I don't intend to pay it. So why? Because I'm going to do my post-graduation and I'll need the money. So he said, but didn't you think about it when you borrowed? So he said, but I don't want to pay. And maximum defaults are in credit education loans. I don't know if you know it, nationalized banks. Some nationalized banks are so pathetic about their record keeping that they don't even send data to the credit bureaus, in which case you're lucky, okay? But if your data goes, and increasingly it does, then you can be tracked wherever you go. In fact, there was a time when IIT students used to pay for their trip to the US. They get admission abroad for their post-graduation. So take a credit card, buy their plane ticket, dump the credit card here and buzz off, okay? So the private companies which hard sold those credit cards, one of them wrote off 1,200 crore. But they've learned their lesson, and now it's all tracked here. And these companies are global, so they can track you when you're in the US. They can track you when you come back to India 10 years later and you go back to open an Indian account. So today there is no escape if you think that you're going to dump your creditor and go. This is the manner in which they track it. One is your payment history, okay? And there is again an algorithm to that. If you pay back your motorcycle loan really fast, it's no big deal. Home loans, they know people don't default. But they catch you on what you're most likely to default on, and half the people are in the defaulter list because they're paying their home loan, but they're not paying on the motorcycle or the EMI they've got for something. And length of credit history is an important issue, because they find that most people pay initially and then they start slackening off, or there are difficulties or whatever. Small point that I want to make here is, it's not that things don't go wrong, okay? You can fall ill, you can lose your job, bad things happen to all of us. So you can have a default. Key thing to remember is don't run away. Go and talk to your lender. So there are 4 credit bureaus today who track what you do. The data is there, you can't escape it. It may come back to bite you at times when, I know somebody from a top law firm who said he paid 1.5 lakhs to a foreign bank because he wanted to go abroad, and he discovered that he can't get his card upgraded because he was a defaulter. And they had some 1.5 lakh of disputed amount. And he said, I'm a lawyer, you know. I could have fought with them for 5 years, but I didn't want to go abroad without having my credit card. He paid up all of that with interest. So financial hygiene, be careful about these things, because you never know when you have very little time on your hand, you're stuck with this, there is nothing you can do but pay, and you may end up borrowing to pay it. So watch what data you have. All the data is shared. Remember also to watch women, since this is for women, what your families are spending, borrowing, what happens on their cards. And finally, like I said, when things go wrong, we have this tie-up with Disha for financial counseling. It's free. Bank of India has this with Abhay. And without having to pay to any kind of dead doctors, you can come and talk to people, talk to a banker, see if you can convert it into easier EMIs, look at how you can avoid a default in your loan records so that your credit history remains alive. Because a default remains in your books for 7 years, okay? Which means for 7 years, you can't borrow. And when I talk about youngsters, I keep saying you dump your education loan. 4 years later, you may have a great job. You want to borrow for a house, and they tell you, sorry, it's not going to happen for another 3 years. So it's not something you can get careless about. Conclusion, avoid losses, make a financial plan, ideally. Remember that you have to live on savings. So first key is, please do not lose money. Wills, nominations, insurance must be up to date. And then listen to what Warren Buffett said. If you don't understand it, it's not for you. And Moneylife, that is the basic principle. We say, A, you need very, very few financial instruments, and you need to avoid nearly 85% of what is thrown at you with advertisements. Thank you.